Insurance basis disability insurance. Disability insurance basis disabling injuries after affect millions of Americans each year. Disability insurance, which complements health insurance, help replace lost income if an individual is unable to work due to disability. There are three basic ways to replace income. Employer paid disability insurance. Employer paid disability insurance. This is required in most states. Most employers provide some short term sick leave. Many long employers provide long term disability coverage as well, typically with benefits of up to 60% of salary lasting for a period of up to 5 years until the age of 65, and in some cases extended for life. Social security disability benefits. This is paid to workers whose disability is expected to, to last at least 12 months and is so severe that no gainful employment can be expected. Individual disability income insurance policy. Other limited Other limited replacement income is available for workers under some criticisms from workers' compensation if the injury or illness is job related, auto insurance if disability results from an auto accident, and the Department of Veterans Affairs. For most workers, even those with some employers paid coverage, and individual disability income policy is the best way to ensure adequate income in the event of disability. Workers who buy a private disability income policy can expect to replace from 50% to 70% of income. Disability benefits paid out and individual disability policies are not taxed. Benefits from employer paid policies are subjected to income taxes. Types of disability insurance. There are two types of disability policies: short term disability and long term disability. Short term disability term policy have a waiting period of 0 to 14 days with a maximum benefit period of no longer than 2 years. Long term policies have a waiting period of several weeks to several months with a maximum benefit period ranging from a few years to lifetime. Disability policy have two different protections features: non-cancelable and guaranteed renewable. Non-cancelable means that the policy cannot be cancelled by the insurance company except for non-payment of premium. This gives the policyholder the right to renew the policy even every year without an insurance in the premium or a reduction in benefits. Guaranteed renewable gives the policy holder the right to renew the policy with the same benefits and not have the policy cancelled by the company. However, the insured has the right to increase premium as long as it does so for all other policyholders in the same rating class. There are several optional options and factors to consider when purchasing a disabling ability policy. Additional purchase options. The insurance company gives the policyholders the right to buy additional insurance at least later time. Coordination of benefits. The amount of benefits policyholders receive from their insurance companies is dependent on other benefits they receive because of disability. The policy species are targeted amount the policyholder will receive from all the policies combined and will make up the difference not paid by other policies. Cost of living adjustment called the called increases disability benefits over time based on the increased cost of living measured by the consumer price index. Policyholder will pay a higher premium if they select the called residual or partial disability rider. This provision allows workers to return to work part time, collecting part of their salaries and receiving a partial disability payment if they are still partially disabled. Return of premium. This provision requires the insurance companies to refund part of premium if no claim are made for a specific period of time declared in the policy. Waiver of premium provision. This cause this clause means that the policyholders does not have to pay premium on the policy after he or she is disabled for 90 years. Factors affecting the choice of disability policy. Definition of disability. Some policies pay benefit if workers are unable to perform the customary duties of their own occupation. Other pay only if workers are unable to perform any job suitable for their level of education and experience. Some policies define disability in terms of workers' occupation of an initial period of 2 or 3 years and then continue to pay benefit only if they are unable to perform any occupation. Honor occupation policies are mere desire but more expenses.